Hello traders, welcome to your daily market update for Friday the 1st of May 2015, and we have a public holiday today. As you can see here, we have Labor Day, so we could see some thin trade in the European session, and we'll close out the week after what's been a quite exciting week. We've had a lot of price action. The European dollar has rallied and caught a lot of people out. The short squeeze was quite impressive. And we'll have to wait and see what May holds for us. We have UK elections and we have non-farm payrolls. The market started focusing on the RBA rate decision. So we could have some quite exciting times ahead of us. But let's have a look at what's happened overnight. As I mentioned, we did get the euro short squeeze continued. That was due to stop loss orders and people adjusting their positions as the market is continuing higher above $1.10. We also seen the bond market push and help the euro higher as well. So that's what accelerated, making the euro the strongest currency pair for the session yesterday. There was no data that contributed to that. It was just purely on the trading basis of short squeeze and bond markets. There's no data for the rest of the week, and for now, $1.13 is the major resistance level. Last night we had some US data. The jobless claims came in at the best that we've seen in 15 years, and that contributed to a bit of a bounce in the US dollar. We had mixed personal spending and income data. The 10-year yields, they rose to the highest level seen since March, so that also helped supported the US dollar. So overall, the US dollar was supported. We didn't have broad-based gains, as I mentioned. The euro dollar and the Canadian dollar and things like that started to dominate, but the euro dollar continued to dominate the session. We have ISM figures coming up for the US dollar tonight, and that will close out the week. The Canadian dollar ended up being lower after all, with the data a little bit better than expected, but it was downward revised, so I think that's why it lost its sting. As soon as the news came out, we've seen the Canadian dollar initiate a little bit of strength, but then once people read the revision of a downgrade, it lost its momentum. But it was a good result, and oil also climbed to the highest level since December. So oil is having a bit of a bounce, and I think that will continue on the technical basis that we're seeing. I think that that we could see some further higher prices there. The Australian dollar was the worst performing currency pair, and that's quite simply because of rate cut speculation. There's been a lot of articles about this and a lot of discussions, especially after the New Zealand's RBNZ's comments. And now that we're starting to get more people weighing in onto the conversation, we're seeing that rate cut speculation really hurt the Australian dollar. It underperformed against everybody. And gold also fell, which also pulled down the Australian dollar. So we'll have to see what continues on in today's trading session. We do have the RBA coming out next week, so we will be watching that with great interest, as the market is already starting to do. The Great British Pound, we had no data at all. It was slightly weaker, but overall, what was a big surprise was the euro versus the Great British Pound. It was the strongest that we've seen since 2013. People started exiting the Great British Pound, and that's on the back of next week's, we're getting close to the UK election, and people are de-risking their positions. And historically speaking, the UK elections have caused the pound to depreciate quite substantially. So I think it's fitting that the euro last night, we had strength, we had short squeeze, and we had a bond market bouncing, and then we had people also looking to exit their UK pound positions. So it was a perfect storm when the euro staged quite an impressive rally. So I think that this week it's been quite exciting, but we do have some data coming up. We do have some manufacturing PMI data for the UK, as you can see here. It's going to be interesting. It's supposed to come out slightly better than expected. You could possibly say it's just flat. So we'll see if that has any impact on the pound at all. And to finish off the ISM manufacturing for the US dollar, everyone will be watching that. And if it does come in positive, I think that the bounce in and support in the US dollar will close out the week. So that's all we have for Friday. It's going to be an interesting session. As I mentioned, it is a public holiday with Labor Day, so don't get too excited with trading pairs. And it'll be interesting to see whether we do get some light liquidity. Having a look at the US dollar, We are still trading between the major support and the major resistance levels here, and I think we're going to remain in that range bound until the non-farm payrolls. So we'll keep an eye of really what's happened. As you can see, we did fall quite low, and then we've bounced, and then we've started today's session on a little bit of strength on the daily chart. So we'll have a look and see, but I think that any rally stage will be capped around this area for now. Let's have a look at the currency pairs. We have the New Zealand dollar on the daily chart, and it's continued to fall after the really big reversal on the RBNZ's comments. Any break of this major support level is going to open up moves to the lower side, and I think we could start to see that, but potentially not until next week. We'll have to wait and see what happens tonight with the US dollar and the data that we've got coming out. The Australian dollar sold off quite heavily. I'll zoom in here for you, as you can see with the trend. I've put in here a support level line at 78.5 cents. I think that is a major level to watch. It historically has been resistance, and we've seen some price activity. So I think that we could be capped around this area now until we move to the RBA's rate decision on Tuesday. We'll keep an eye on the Australian dollar, but for now, as you can see here, we do have a perfect candle formation, 3 candle formation that does suggest that we are looking for lower moves, and quite possibly it all depends on what we have coming up from the Glenn Stevens and the Australian government. The Great British Pound rejected the 200-day moving average, as you can see there, and I think that we are looking for moves lower. Any moves lower will be capped by the 100-day moving average and possibly some historical levels that have been offering up support and resistance in the past. So we'll be having a look for levels from here and down into there before we move into a level through here. So for now, I think that we will see, we have seen a top in the Great British Pound for the short term, and we'll see where it leads us. This could be the start of some greater falls, especially if we see people starting to worry about the UK election and what impact that could have on the currency pair. So I'll be keeping an eye on the headlines and looking at price action to try and work out exactly how far I think the flows are going to occur. The euro was strong, as I said, and we continue to push. The next major resistance level is $1.13, and I'll be watching that quite clearly. And I think that any moves up into this region may be capped for now. We'll have to wait and see, but for now, momentum on the euro is definitely on the side. The push was due to the bond market, and we'll be keeping an eye on the bond market to see if it continues its staging its rally through to close out the week. It has been quite a good week. If I move to the weekly chart, you can see a big bounce there, but we are approaching some resistance levels, and we'll see how far they are actually capped. If we do pull some Fibonacci's from the all-time highs and the all-time lows, we are looking at a Fibonacci resistance level around where we are staged now. So if we do break that, we could move up into the Fib 50 level, and we'll have a look at what we've got for those next week. So if I pull a Fib here for you, you'll see that we are at the Fib 61.8, and then we could possibly move up and test the Fib 50 before this overall trend actually starts to play a role. If we have a look at the US versus the Canadian dollar, we did stage a bit of a bounce here off the 61.8, and if I zoom out for you, technically speaking, that is since we started to get this big exponential curve rally, and we have had a pullback. So for now, we have found some support in the short term, and I think if the US dollar gets some good data, we could move up a little bit higher to close out the week. US dollar versus the Japanese yen, we did have a strong US dollar, and it was quite a strong performing bounce that we've seen there, but we are still within a consolidation range, and I don't think we're going to see this pair break out anytime soon. Well, not until the non-farm payrolls at the very least. So for now, it's in a sideways pattern. Well, that's it from me today. That's it from me for the week. I wish you all the best of luck. Have a great weekend. I'll be back again next week. And until then, trade well.